All right, let's talk about Bitcoin. You hear the word everywhere, right? It's a digital gold rush, a tech revolution, this huge financial mystery. But what is it, really? Let's forget all the hype for a minute. Today, we're going to break it all down and get to the simple truth of what Bitcoin is, how it actually works, and maybe most importantly, the age-old problem it was created to solve.
So what's the big deal? Why are millions of people Googling the word Bitcoin every single day? Well, it's because at its heart, it's not just some fancy new technology. It's a fundamental challenge to the very idea of money itself. And that's exactly what we're going to unpack piece by piece.
You know, to really get a handle on Bitcoin, we've got to go back, way back. We need to talk about money itself, because believe it or not, the story of how we went from trading grain to just tapping our phones is the exact reason something like Bitcoin was even imagined in the first place. For the longest time, money was something you could actually hold in your hand. We bartered with grain, we traded shiny gold coins, but let's be honest, carrying a bunch of gold bars around is a huge pain, right? It's heavy, it's risky. So this new idea came along. Government said, hey, give us your gold for safekeeping and we'll give you these handy paper receipts for it. And just like that, those receipts became our money. Eventually, those pieces of paper just became numbers on a screen, what we see as our bank balance today.
And this right here, this is the most important part. Every rupee, every dollar, every euro, it's basically just an IOU. It's a promise from the government. So over time, our trust shifted from a physical thing, like gold, to a promise made by a central authority. Our entire global financial system isn't really built on gold anymore. It's built on trust.
But here's the question. What happens when that trust gets a little shaky? See, the very system we all rely on every day has some pretty fundamental flaws. And understanding these cracks is the key to seeing why an alternative like Bitcoin even showed up.
I mean, it's a fair question, isn't it? If the government can just create money, why not just print enough to make everyone rich and fix all our problems? It seems so simple. Well, it's not quite that easy, and the answer is actually pretty straightforward.
And this example makes it super clear. Let's call it the potato problem. Imagine there is only 1 kilogram of potatoes left in the entire country. Just one. But the government gives every single person 1 million rupees. What do you think happens? Everybody rushes to buy that 1 kilogram of potatoes. The price doesn't stay the same, does it? Nope, the price of potatoes just skyrockets to 1 million rupees. You see, printing more money didn't create more potatoes. All it did was make each rupee worth a whole lot less. And that, in a nutshell, is inflation.
But hey, it's not just about inflation. Think about it. When you put your money in a bank, you're handing over control. Banks can make some pretty risky bets with your funds. Just think about Lehman Brothers. And governments can change the rules of the game overnight. We all saw that with demonetization. What you end up with is a centralized system where a few powerful groups hold all the cards. And well, the average person is the one left bearing all the risk.
So it was right in the middle of the 2008 global financial crisis, as this exact system was crumbling, that a totally radical new idea was proposed by a completely mysterious figure.
Yep, October 2008. The traditional financial world is in chaos, and suddenly this document appears online from an author nobody has ever heard of, Satoshi Nakamoto. To this day, nobody knows who they are. But this paper wasn't just some vague idea. It was a complete, detailed blueprint for a financial system with no banks, no governments, nobody in charge.
And that blueprint was for Bitcoin, a totally new kind of digital money, designed from the ground up to be completely decentralized. And that word is key, decentralized. It means no single person, no big corporation, and no government could ever control it.
Okay, so we've covered the why. It's supposed to be an alternative to a system that has some pretty serious issues. But how does it actually work? I mean, how can you have money without a bank keeping track of it all?
This was the central puzzle that needed to be solved. To have digital money, you need computers to track who owns what. But if you put one single company in charge of those computers, well, then you've just gone and created a new bank. You're right back in the same centralized system you were trying to escape from.
Satoshi's solution to this was, frankly, genius. It's a process called mining. So instead of one central server, the idea is that anyone can connect a powerful computer to the network. These people are called miners, and their computers all compete to solve a really complex math puzzle. The first one to solve it gets to verify the latest batch of transactions and add them to the official record. And as a reward for all that work, they get paid in brand new Bitcoin. This whole process of mining and verifying transactions is what creates the blockchain. Think of it like a giant public digital notebook that's copied across thousands and thousands of computers all over the world. Because everyone has their own copy, no single person can secretly go in and change the record. To cheat the system, you'd have to hack thousands of computers at the exact same time, which makes it incredibly secure.
And hey, remember our potato problem, inflation? Bitcoin has a solution for that built right into its code. There can only ever be 21 million Bitcoin, period. Unlike government money, nobody can just decide to create more out of thin air. This built-in scarcity is what's designed to protect its value from inflation.
Okay, so this whole design sounds pretty revolutionary, doesn't it? But it is definitely not without its own set of huge problems. For all its promise, Bitcoin comes with some really serious challenges and risks that you absolutely have to understand.
So what you have is this massive trade-off. On one side, you have the promise, money that you truly own and control, with a supply that can't be messed with. But on the other side, you have the reality. The price swings are absolutely wild. You can't use it in most places, it has a reputation for being used in illegal activities, and maybe the biggest issue, there is no safety net. If you send your money to the wrong address or lose your password, it is gone for good. There's no one to call.
Now, let's bring this whole global topic right back here to India, where the legal and regulatory situation around Bitcoin has been, well, anything but simple. So, where does India stand on all this? This is the crucial part. It is perfectly legal to buy, sell, and hold Bitcoin. However, and this is a big however, it is not considered legal tender like the rupee is. This puts it in a huge regulatory gray area. It means you can get involved, but you are completely on your own. There are no official protections if something goes wrong. All the risk is on you.
And the journey to get to this point has been a real roller coaster. Back in 2018, the RBI tried to shut it down by telling banks they couldn't work with crypto exchanges. The exchanges fought back, took the case all the way to the Supreme Court, and in 2020, they actually won. The court overturned the ban. So where are we today? We're kind of in a holding pattern. It's unregulated, and everyone is just waiting to see what kind of rules the government will eventually come up with.
And that's where we are today, with an asset that's legal to have but has absolutely no government backing or regulation. It's just sitting in this strange limbo between a brand new technology and an old financial system. So what is the future of Bitcoin in India? Is it the future of money, or is it just a passing fad? The truth is, the story of Bitcoin is still being written.